To explain for those, Maura, good morning, those who might not understand just what we're waking up to, what is our economy like this morning as we head into a new day?
So a technical recession essentially means that you have two consecutive quarters of quarter-on-quarter negative growth. So in the first quarter, we saw a contraction of 2.6%, now another contraction of 0.7%. That is essentially what causes the technical recession. And really it was a surprise because the Reuters consensus was that there would maybe be a mild expansion of 0.6%. So really disappointing.
So what does it actually mean now for the consumer? What does it mean for our day-to-day lives?
So you can see in the GDP results that the South African consumer is under immense pressure. If you look at the fuel price increases, more than R2 since last year, the increase in VAT from 14 to 15%, high levels of unemployment, a generally slowing economy, all that is a perfect storm for the South African consumer. And you see that in declining household consumption, which shrank by 1.3%, also taking away from economic growth.
Now, you saw some of the views earlier, some saying there's no real need to panic, you know, we'll watch the next quarter, we'll see what happens, we will find our way out of this. Others saying, well, maybe panic just a little. How do we find our way? Because, I mean, our finance minister himself, not too panicked by this, or he's not showing it even if he is, but saying that there is a plan, there is a remedy, there is a recovery plan. What would government need to do to get us out of this?
So I think that President Ramaphosa's investment roadshows are crucial. If you look at the investment deals with Saudi Arabia, China, the relationship with the UK, all of that is crucial because it can stimulate fixed investment, and that is an important ingredient for higher economic growth. Plus, of course, you need a high level of policy predictability because investors need a certain planning horizon. And in a context where there's a heightened perception of risk associated with emerging markets, if you look at Argentina, Turkey, the rising global trade tensions, all of that means it's becoming harder for an emerging market like South Africa to attract capital flows. Investors are moving their capital into safe havens like the US dollar, and so it's important that South Africa sends the right message to investors.
Now, last year this time we were very worried about downgrades, and we managed to, by the enamel of our teeth, I think, just scrape by there. What does this mean for us?
So the concern of a downgrade is really back on the table. If Moody's decides to downgrade South Africa, it would mean South Africa's local currency credit rating would be non-investment grade. It would mean that South Africa would leave the World Government Bond Index, and that in turn would lead to significant capital outflows, a weakening in the rand exchange rate, and then concerns around potential increases in inflation. That, of course, impacts the South African consumer again.
Now, we saw governments just cushioning the blow of the latest fuel price hike. I mean, just 5 cents a litre from midnight last night as opposed to 25 cents. When it comes to interest rates, are we expecting, in light of what we've seen now, that there might be some respite or just a holding off on that the next round?
So the Monetary Policy Committee is meeting in a couple of weeks. And with that reprieve on fuel prices, it is quite possible that the Reserve Bank would keep rates on hold. So that would be a reprieve because the Reserve Bank has warned that it is moving into an interest rate hiking cycle.
Okay, so your advice then to consumers, Maura, for how do we ride this out? I mean, lots of people saying let's wait till the next quarter, let's see, it should be better, but we learned our lesson yesterday when we thought it was going to be better. Expect the unexpected. How can consumers ride out the storm, the perfect storm as you described it? Yeah.
Exactly. So look, it simply takes much longer for that euphoria to turn into higher fixed investment. And so I would say to try manage your finances carefully, to try not become too overstretched where possible. That is obviously easier said than done. But I think it's important for consumers to anticipate that in coming months there could be interest rate increases. And so it's important not to become overstretched by being over-indebted where possible.
And government might not save us from the next fuel price increase. That's, well, they said it's temporary. Okay, thanks very much. Certainly a bleak Wednesday morning, but I suppose we'll have to weather the storm. Tighten your belts just a little bit more if you have another hole in that belt.